Hey everyone, this is your stock market recap for September 13th, 2011. My name is June, and of course I have Chris here with me.
Hello, everyone.
Okay, let's take a look at the market here, S&P 500. We had the channel that we've talked about for quite some time, and yesterday it looked as if the market was ready to break down from that channel. But unfortunately, just like the market, it's not going to be that straightforward. It decided to close back above it, forming a hammer, almost like a fake breakdown, so to speak, from this channel. So that's something we have to work with, and I guess this channel isn't as clean looking as it was before. However, the trend short-term wise is still down. Okay, so just because it made a fake breakdown today or yesterday doesn't mean that the bearishness isn't there. It just means that something else is in the work or some other pattern is forming right now. We just don't know exactly what the pattern is. But overall, like I've mentioned, the downtrend is still intact. Actually, let me go into the Dow real fast. The Dow still more or less fits within the channel, even though it actually broke down from it 2 days ago, fell down, and at least seems to be coming back to retest it as resistance. So far the Dow is cooperating very well, whereas the other indices hasn't exactly done so. Actually, the RUT is still holding on to the support line, and the NASDAQ is still holding on to that support line. So we're starting to see some discrepancy, and as I mentioned, when you starting to see discrepancies between the different indices, you know that the momentum isn't as strong. And I've mentioned this already. The downside momentum that I expect for this next leg lower isn't going to be as intense as this previous leg here. So you're going to see certain indices hold up a little better than other indices, and it seems like the Dow, the larger caps are breaking down faster than the technology and the small caps. So that's what we're seeing right now. But overall, like I mentioned, short-term wise, the trend is still lower highs. Okay, we haven't seen lower lows yet. Right now, the 1140, give or take 1140, seems to be holding as support. But you can see the highs, each push higher, isn't as high as the previous one. So we are seeing some dip buying, but there's not a whole lot of follow through with each dip buying, almost forming a small triangle right there. So who knows, right? Maybe we can get some more choppiness in this triangle and then eventually break down on that 1140. So the market's telling us that this level, 1140, it's an important buy level, and if it breaks, then we can probably see more downside, most likely towards 1120, 1110 area. Okay, so watch for that. However, if we start seeing some stronger momentum, especially a break above this previous high, then something else is in the works, right? Because now we're starting to see higher highs, right? If we get above this, but right, if it stays underneath this, then it's still lower lows or lower highs, so to speak. But if it gets above that, then that's a higher high, meaning that now the buying pressure is able to push above this previous pivot point. So pay attention to that as well. Overall, daily-wise, kind of hard to tell, but still choppy, still trending underneath this 50-day moving average. So what can I say, right? Pattern isn't as clean, but still downward momentum is still there. Uh, what do you have for us, Chris? Anything you want to add?
Um, excuse me. Actually, yes. Uh, if we, well, we don't have to draw the channel, but this market has been chopping around inside this channel, and it's been moving up. And if you look at a lot of stocks, even to like for your watch list to the downside, you're going to see that a lot of them, if they move down or they even rally back up, there's a lot of divergence going on in the MACD histogram, and there's not a lot of clean cut patterns out there on the bearish side. So even though we are expecting a break of the channel and a move lower, there's not a lot of clear patterns right now. So this is basically where we're going to have to wait until probably the lower part of the channel is broken or the market, moves under 1140 before we really become aggressive at shorting.
Yeah, so same story basically. As far as stock-wise, there's really not a whole lot to be doing, and let me just kind of go over what I'm looking at. I've mentioned GMCR yesterday. Um, See, this is the characteristics of these kind of markets. We got a nice breakout early in the morning, above 11 or 111, but it fell back underneath the breakout level. So this could be potentially a fake breakout, just kind of like what happened with MasterCard here, where it broke out but it quickly faded back in. So if we get a trade underneath today's low, then that would uh, make for a better fake, and actually that could be shortable if you see a fake breakout like that underneath today's low with a stop above today's high. Okay, and I also mentioned just keep your target short. Right now, overall, if you're going to trade, you should be. If I were to say anything, like let's say if you're going to trade, it's better to be batting singles as opposed to trying to go for home runs. Okay, so take short targets and quick profits. But that one, I think someone mentioned Cisco, and I think that this is worth mentioning. I mentioned it before out here when it broke out, but it stalled right underneath this 1650. So 1650 is a pretty critical pivot point. Volume starting to pick up a little bit. But again, it depends on the market. If there's some momentum coming in, then sure, we can easily see a break above 1650. But if not, then this will continue to act as strong resistance. Another one that's worth mentioning to the upside is SIMO, SIMO, however you want to say that. Very nice breakout actually outside of this triangle today. Good volume. You can see this high above average volume. But even though we got a nice breakout, it's falling right back into this resistance. So if it can base a little, form a little base here and then break out higher, then I think this is worth watching. Kind of like how this one here, Pano, I think I mentioned this, just keep an eye for a breakout. It's worth watching, because anytime, even though these things don't exactly break down, right, when the market's breaking down, these kind of form a base, you just don't know that one day when the market's green, these things will pop, these things will break out, okay, so it's worth watching. Just looking for price action. So Pano, so the same thing happened with this stock where it was just basing while the market is chopping, and then as soon as we have a green day like today, it decided to break out. So this is why I still want to maintain a watch list of bullish stocks just in case that these things decide to break out on any sort of strength in the market. So, but overall, I think these guys are done for today, and the only thing, quite honestly, that hasn't exactly made its move or it's about to make its move is Cisco. That's really worth watching right now. And as far as short-wise, CHSI is probably the only one that I see right now that has a good setup. You can see it's wedging higher, or it wedged higher, broke down from this support level, and it came back and retested as resistance. So a very classic type of pattern where you get a break of support and it comes back and tests as resistance. If you're aggressive, you might actually be able to take a short position, of course, assuming that you're bearish on the market. Take a short position because your stop is basically above here. Our assumption for shorting this stock is that it broke support and it should stay underneath this resistance. So maybe above 54, so not that big of a stop. You can see it's also rising up to retest in another wedge. Okay, so something to pay attention to. Maybe if you want to be a little more conservative, a break of this wedge here would be good to short. So that's all I have for right now. Chris?
Can we take a look at USO?
Yeah.
I really like USO to the upside. It is forming an ascending triangle right now with 35 around that level as nice resistance. Now, the thing that I see in this, though, is that the 50-day EMA is right where prices are right now. So even if USO can get above 35, I still want to see it get above that 50-day exponential moving average. If it does, then we can see a very nice pop, probably about a 3-point pop up to around the $38 level. The next stock that I have on my watch list is FLR. And basically it's been just chopping around in, you could say, a similar type of ascending triangle, or you can just say a triangle in general. And so I'm watching this for either a break of the top of the triangle or the bottom of that triangle, but preferably the top, to be honest with you. If this market gets more selling, or excuse me, if the market gets more buying pressure into it, probably move above 1200 or so, and FLR makes a nice breakout, then we can probably see it make another pop higher, probably around the 62.50 level, around that level. And that's about it. There's Amazon we can take a look at real quick. This is something really on like a day trading type of thing, especially this week, is options expiration Friday, so kind of like weekly options. If it has some nice resistance around the 220 level, and if it wants to get above 220 around there, yeah. If it gets above there, it'll probably make a nice little pop up, and this is where what I've been saying to you guys about how there'll be an out of the money call option for about 10-20 cents, and if Amazon makes its move, probably up to 225 or so, that call option will be around 40 cents, maybe even potentially 50 cents. And I like to get out if the call option decreases like half its value, or if like my target to resistance around 225 is hit. But it's just a day trade, just to get your guys' mind going to a lot of the different strategies out there.
Okay, so I think overall right now it's really about being patient and being, I guess, choosy, in your setups. I think one of the things that being an active trader you fall prone to is over trading, especially in markets like these where you're so used to buying and selling on a daily basis that you're almost you're forcing yourself to trade just as much as you did before. And I think that's actually more damaging than just not doing anything at all. So that's something to really pay attention to. I mean, are you overly trading throughout the day just to basically get some action, because the market's not really going anywhere. So you're just like, digging for trades, going through your watch lists, almost forcing the trades to happen. And so just watch out for that and ask yourself if that's something that you're doing. So until you really get a clear direction, then sure, you can be a little more active. But right now, I think there's really not a whole lot to do. And if you're really forcing yourself to trade a lot, then that's something to consider. I mean, I wouldn't really trade a whole lot during these market conditions when it's so choppy. But so overall, like I said, there's really not a whole lot to mention other than just wait for this break of support. Okay, so just wait for the break of the support, and to give you a better clue as to when and the market's ready to break down. So right now, we just haven't seen that break of support, even though it came very close to it yesterday. So, all right, with that said, I think we're good for today, and then we'll go ahead and speak again on Thursday.